Good morning, everybody, and welcome to Monday. Today is May 19th, 2025, and this is your Monday market update. Now, this past week was all about momentum, driven by a surprising shift in the tariff landscape, cooler than feared inflation, and some big name AI headlines. Let's break it down day by day, and of course, we're going to preview this week ahead. On Monday, markets came out of the gate flying to start the week as news of a significant US China tariff reduction ignited a broad rally. The U.S. agreed to reduce tariffs on non-exempted Chinese goods to 30%, while China responded with a 10% cap on U.S. imports, both lower than expected and far better than feared. President Trump reinforced optimism with comments about reaching a more permanent trade deal, and the market loved it. The biggest winners were, of course, tech, consumer discretionary, and industrials, sectors that had been punished earlier in the year on stagflation concerns. This was textbook risk on day, with the beaten down names snapping back and investors repositioning quickly for a softer global trade environment. The Dow surged up 2.75%, S&P up 3.25%, and the Nasdaq was up 4.25%. The rally continued on Tuesday, although a tone shifted a bit. April CPI came in softer than expected, rising just 0.2% month over month and 2.3% year over year, the lowest reading since early 2021. That helped ease fears that tariff-related inflation was starting to bite. Markets also got a boost from a series of AI investment headlines during President Trump's Middle East trip. Deals involved NVIDIA, Apple, Oracle, OpenAI, they all sparked another round of tech enthusiasm. But while tech names continue to climb, the Dow slipped on late session profit taking and a rotation away from those value names. Notably, this marked 2 consecutive days of NASDAQ strength, driven by renewed optimism around innovation and the possibility of lower rates ahead. The Dow was down 0.75%, S&P up 0.75%, the Nasdaq up 1.25%. After 2 powerful up days, markets did pause midweek. Hump Day Wednesday was more about digestion than direction. The early gains were fueled by more optimism on trade, including potential U.S. deals with Japan and South Korea, and a steady stream of positive AI-related headlines. Fed head Jefferson also struck a constructive tone, saying that the labor market remains strong and that recent GDP weakness may be overstated. Traders were watching closely for signs that the Fed may be willing to cut rates later this year. Midday, a headline suggested that the administration might be looking to weaken the U.S. dollar through trade deals, caused some jitters. Even so, the market recovered into the close. While Wednesday lacked the fireworks of earlier in the week, it did help to solidify gains and suggested investor sentiment remains resilient. The Dow was down 0.25%, S&P up 0.25%, and the Nasdaq also up 0.25%. Thursday started on shaky footing after Fed Chair Powell warned of future supply shocks, suggesting the Fed might reevaluate how it communicates policy going forward. Then came economic data. April retail sales missed, and on the control group reading specifically falling 0.2% when a gain of 0.3% was expected. PPI also came in cool. All of that helped inflation concerns subside further. Despite the weak data, or maybe because of it, rate cut bets increased, sending treasury yields lower and equities higher. Dovish money flows returned, lifting small caps and growth stocks. Positive US-EU trade headlines helped to fuel the late day rally. Even a cautious Meta headline mid-session couldn't derail the upward trend. Markets continue to climb that wall of worry, and Thursday was another example of bad news, at least in the short term, being good news for stocks. The Dow was up 0.75%, S&P up 0.5%, and the Nasdaq up 0.25%. On Friday, U.S. stocks closed higher, capping a strong week fueled by easing trade tensions and cooling inflation data. The S&P notched its 5th consecutive daily gain, while the Dow erased its year-to-date losses. Investor optimism was bolstered by a 90-day pause in U.S.-China tariffs, obviously, and signs of moderating inflation, which raised hopes for potential Federal Reserve interest rate cuts. For Friday, the Dow was up just over 0.75%. The S&P up just under 0.75%. The Nasdaq was up just a bit over 0.5%. For the week, what a week it was! Dow Jones was up almost 3.5%. S&P up 5.33%, and the Nasdaq was up 7.25%. Now, the Nasdaq led weekly gains, driven, of course, by strong performances in the technology sector, particularly among AI-related stocks. The S&P 500 turned positive for the year, while the Dow also moved into positive territory year to date. Overall, the week reflected a shift in investor sentiment, with markets responding positively to developments in trade negotiations and economic indicators, suggesting a potential easing of inflationary pressures. This week was a potent reminder that market narratives can flip fast. Just a month ago, the conversation was all about stagflation and recession. Now, with tariffs easing, inflation cooling, and AI driving investments, we're suddenly back to a bullish swing. Now, but that doesn't mean the risks are gone, only that the market is pricing in a more hopeful path forward. As always, we'll be keeping a close eye on incoming economic data, Fed speak, and any changes to the trade outlook. I'm not really sure there'll be time for any other news this coming week, but Fed heads are on parade. Bostic, Jefferson, Williams, Logan, Kashkari, Barkin, Collins, Musalam, Kugler, Hammock, Daly, Schmid, Cook, and this coming Sunday, Powell will be speaking. He's speaking at the graduation of Princeton. There will be a bit of time for labor data on Thursday, jobless claims and continuing claims, then services and manufacturer PMI, and some home sales data. We are nearing the end of earnings, right before we restart earnings. But this week we'll hear from Home Depot and Lowe's, Palo Alto Networks, TJX, and even Target. Some of those retailers will be important to watch. Headlines in the news, watch for the president, of course, watch the Middle East, and of course, watch the Russia-Ukraine war. Late Friday, though, Moody's finally arrived at the party, and like S&P and Fitch before them, they now have downgraded the U.S. debt. Lots of reasons, massive deficits, huge debt, less treasury demand, and I'm sure the continued dysfunction of Washington didn't help at all. Looks like it may weigh on the markets early today, but we'll see if that makes a difference. I maintain it will be trade announcements, real work being done, eco data and earnings, but it all comes down to valuation. Now soon, probably next month, we're going to start to use 2016 earnings for valuations. We'll have to see what that starts to look like, but that is very, very important to see. If you have questions about how these shifting headlines impact your portfolio and your financial plan, please don't hesitate to reach out. Have a great week, and we'll see you soon.